Hey there, everyone. Happy Saturday to you. I got 5 underdog stocks that if this week is a strong week for us in the markets, that the labor market reports don't tank the market, for example, but instead we find out that, hey, this isn't so bad. We're still all right for yet another month. As long as we get yellow lit or green lit, I think that the market's direction is up, and these underdog stocks should be able to help us outperform, and the technicals are suggesting that they would like to. So I'm going to put those up on screen for you. Very excited about them, especially the last two. Wait until you see them. So popping this up, we're going to kick things off with the trade desk, which you can see if I zoom out here. Man, this thing's been smashed down over time. Now, what makes this thing a pretty good, excellent number 5 on the list underdog stock out of these 5 that I have for you? We'll zoom in here, and we're going to zoom in a bit more. There we go. Oh, so first of all, the candle structure that we have is fairly nice looking. That you see at that nice bottoming formation here with an engulfing candle that follows it. And that break above signal that first move upward. You can see that we're getting stopped at the 13 EMA on the daily chart, TTD for the trade desk, by the way. And so a push up above that 13 could be very good for us. Now, mind you, we're down below the 50. We're down below the 200. So they're at 56 and at 72. But man, this thing can put in some outperformance if we get favorable market conditions. So this is one that I'm absolutely watching for right now. If we put the technicals on screen, well, before I get those, check out the volume. That turnaround candle that we got, that bottoming candle, had nice high volume, tapering a little bit from there. If we can push up above the 13, we might be able to see some more of it. All right, so now to the technical side of things. Let's pop those up there. What do we got to watch out for to the north? Well, you can see if I go like this, it looks like a bunch of noise on your screen. So let's go back down to this part of it. There we go. And we'll stretch it out some more, and we'll expand it some more, and now we actually have a usable view of this thing. So right now, we closed the market on Friday at about 47.16, and we have room up to that $50.21 before this bottom pivot that we have over here. Now, that's about $3 north of where we're at, which is actually pretty significant from even a daily or even weekly standpoint to gain that sort of percentage, and that's definitely something tradable in a place where we have a deep enough options market to really take advantage of a move like this one. Now, it would be trading against the market bias, so or against its own bias, I should say. There's a bearish bias currently with a stock like this one, so that outperformance could be a very momentary push upward and then a longer, more sustained push downward. So we got to be aware of that. It is one of those things that does go along with those underdogs, especially when we're down below the 200, when we're down below the 50. We're looking for that reason to believe that the bottom is in for us. And we're getting some signs that suggest that at least a temporary bottom is in for us for the trade desk, with some room to look at to the upside from where we're at for right here and potentially in the very near future. If the market bias, by the way, this week sours and we get a major broad market sell-off, well, then just know that these underdogs are likely going to go under a bit more. But then we can look to the south to see that next opportunity comes in. So around 43, 42, down to about 39 would be that next one that comes in, just from a rough standpoint. But this is mostly about being bullish. It's a little bit more fun. Now, mind you, we also want this green 5 that's coming down this way, this moving average that's swooping down through here. We want it to come up and cross the yellow. That's a bullish signal. We also want the RSI, which is all the way down here, down below the volume. We want this to cross back up over 50. Now, mind you, we have higher RSI than what we had back here. Back here is 37.14. Now we're at 37.41. You can see the rise after that oversold situation that we were in. So yes, we're still in bearish territory, but that's the nice thing about underdogs is that if we can find the ones early that have that chance of flipping bullish on us, then we can be flipping bullish as well and really capture that upside from being early on in the price increase of stocks. Now, mind you, I don't want to front run this. I don't want to be in ahead of this. I think that trade comes in north of 47.77, and I honestly think that this pivot of 50.21, if we catch the right momentum, if we catch enough volume with it, we could actually push up more to the tops of these over here, about 55 maybe, and up here to 56. So we definitely want to be watchful for that because it does have that potential for outperformance. But if we try to front run the markets are going to take our money. So we got to be very careful not to try and get out ahead of it, but to ride the waves as they come along. So what is it? Hang 10, party on, fellas. I don't know. I'm not from the West Coast, but those are the extent of my surfer terms. So UA for Under Armour, the daily chart that we're looking at here. This one I like a little bit more because the volume profile suggesting that during this sell-off period here, we actually did taper a little bit, and now we're starting to see an increase as we go a little bit back the other way with these very indecisive candles as it trails off. Well, what happened to us on Friday? We actually had a rather large move to the north, and we're starting to see again a slight increase in volume as we're starting to get this. We want to get the 5 to cross over the 13. That's definitely what we're looking for. So this yellow moving average needs to be crossed by this green moving average. Anytime that you have a faster moving average crossing over a slower moving average, that is called a bullish crossover when it crosses up above. Now, if the faster moving average crosses down below, that's called a bearish crossover. So we want to look for those bullish ones. And again, for Under Armour, just like what I said for the trade desk, we are in an overall bearish bias for the stock. So we definitely want to be watchful for that. If we can continue north, if we can get that cross between the 5 and the 13, which are about 3 cents apart as I record this video here, that push up to the 50 is about 524. Most likely that would involve some sort of retracement back down to the 13. And then if 13 and 5 can hold as supports, mind you, 13 support is huge, especially a rejection off the 50. Watch for that holding support in the 13. That tells us that we're going to go back and retest the 50 as well as we can know anything. Again, keep the overall market bias in mind for this. If the market's going green for us, and especially if it's running wild, these should also have that potential to run wild. They're already showing signs that they could. Now, volume looks okay. RSI is looking a little bit better than what we had for the trade desk. We have a clear rise from this oversold territory, marching up, and now we have an even better break to the north on this. Still bearish, but that's what I'm looking at, is looking for that time where it goes, where it's flipping bullish so that we can be flipping bullish. So a last peak that we had on this, by the way, is 41.63. Now we're at 45.62. We have to get up over 50 on that. We need to see that crossover between the 5 and the 13. And it's excellent if it happens on increased volume. See what something that looks like a volume like this over here that shows conviction in the move, much like this volume conviction after the earnings drop, led us to this subdued area that we have down here. We want to see that conviction coming along in the play for Under Armour. So let's put up the technicals just for a moment to see what we got. And guys, there's not much of anything up until the moving average, and then we also have these peaks over here, which is north of the moving average, right around 540, and then up at 574, which, mind you, if we get up this high and we're in this kind of area of nothingness in between, we might even be able to squeeze $6 out of this thing before we really turn around up near that 200 day. I don't want to talk too much about that because I don't want to get ahead of ourselves. This is more something to watch, something to track. And for me, I'm not ready to put that cash out there on it yet. I would like to see the RSI move farther north. I would like to see that bullish crossover happen before that sort of stuff happen. Especially if we get that retest of the 13, that would be that time for me that I think I would be a little bit more bullish on something like this one. So for Chipotle Mexican Grill, CMG, this thing, man, this thing is tanked pretty darn hard. So it was all the way up here at this peak. 65. It was north of 60, so we'll say mid 60s is where we were at up here. Actually, I'm sorry, it was closer to 70. Now that I adjust this a little bit, now we're down to about 40. That is a massive, that's like a 40% loss that we're at right now. So big old correction over time for CMG, for Chipotle Mexican Grill. But if we look more near term at what's going on right now for Chipotle, go CMG. You can tell it even looks a little bit better than what we had for the previous two, and that's why it's number 3 on the list. As we look at this one, we definitely want to get north of $40.40 if we can. That takes us up to this previous pivot that we have over here at about 41 and change. And now that's not a lot. It's about 2.5% north from where it's currently at the moment. But if we get that bullish crossover, and especially if we can do it on some good volume, yeah, we got some tapered volume right now. It's a little bit troublesome. We had that engulfing candle. You can see the buying pressure that we're getting down here. This is showing me that there's a good likelihood that the bottom is currently in and that we could get that push farther north. So what does the RSI look like on this one? Well, we have an even more consistent climb out of that oversold territory, marching up. You can see the rise in the RSI, still bearish, but it is climbing up. We want to cross up over 50 on this one to flip into bullish territory so that we can also flip into bullish territory. We are down below the 50 and the 200 on this one. So once again, overall bearish sentiment, and we want to see where we can go with this thing if now's that time. So you guys can see big fat area of resistance to the north, and that starts right at about 42.50. So with that's like a 6% climb from where we're at right now. That also puts us near this 50 EMA in red that's coming down here. And once again, let's see if I can use my amazing and excellent drawing skills. Make sure you hit me up in the comments to let me know just how good you think these drawing skills are. There we go. this is the sort of shape that I would love to see, where we come up off these moving averages, we hit the 50, boing off of that one, come back down, test the 13, which hopefully continues to come up this way, take that bullish bounce, and then push back over the 50. If we can do that, that should be able to catalyze us and push us farther north, hopefully getting back to that point where we can retest the 200. We do have to be mindful over here of this peak that we have at 47.18. But look at that gap that we have to fill all the way back up to 51. Now, mind you, the market is currently worried that the labor market is falling to pieces. And if that happens to be the case, well, then these plays also fall apart. So keep that in mind, that the labor market reports this week, ISM manufacturing, initial jobless claims, JOLTS, non-farm payrolls, and then also unemployment rate is the other one. The narrative they tell is going to be wildly impactful to what we see here. We want all of those to say that there's not much to worry about right now. And the market, I think the market will be okay with that. The market, I think, will continue its climb if it's signaling that right now things are still just fine. They're okay. They're not great, but they're fine for now, until that market hits that moment where it's like, okay, things we can't excuse this. This is bad. As soon as the market gets news that that is the case, that's when we're going to see that steep correction, if you will, in the market, and hopefully not turning into a crash. But if it does, I got some cash ready, and I hope that you do too. So let's put this back up here. So for Chipotle Mexican Grill, I'm looking for that outperformance. Hopefully that's able to take us up at least another 10% from where we're at now to these previous peaks that we have over here. This would be great. We'd have to make it up over this resistance that happens at about $41, and then 44 takes us into more resistance starting at 42.50-ish, and then up above that we start to really get to the north. But let's try and make it up to the 50 EMA first, and then we'll worry about getting north of 50 EMA, pushing onto that 200 EMA instead. So top two now, our boy Crocs. Look at this one. Listen, if this offends you, I'm sorry. I think that Crocs are some of the ugliest shoes that I've ever seen. Now, mind you, my wife worked in the fashion industry, and she might actually know a little bit more about the high fashion side of things. So she might be like, Crocs are nothing. Like, check out some of this footwear. But for me, for those everyday shoes that I happen to see out and about, I've just never been a fan. But I can tell you that two of my daughters, at least, are fans of Crocs, and they like to argue with me over that. And that's fine, because everybody's entitled to their opinion, and that's mine. But despite how they look, this chart is very pretty. Despite the fact that I think that Crocs are ugly, some of the things that I really like about this. Number one, look at that movement that we got on Friday. That was incredible. Look at the volume that goes along with it. Now, it's not explosively bad like we had on this one, following about a 30% drop for their earnings on August the 7th. But this is a time that shows us that, okay, now might be the time that we start to see some of that accumulation come back to the stock. And the RSI is rising from where it had bottomed out. Now, mind you, we didn't have that peekaboo like we did back above 50 before selling off again, and that cooling off again in terms of bearish momentum. But we are up above these previous peaks that are in here, and that's still a good thing. We're at 48.05. That's almost bullish territory, and it looks like we're actually starting to get some, not these subdued volumes for consolidation, but that we got a little bit of a sell-off, and now we're getting some more of that accumulation that could be confirmed by a further price movement to the north. So let's look a little bit more at the candles, and we'll reset the view on this so you can see a little bit more. There we go. We'll pop those up there, and you can see that we have some near term, just by the candles, resistance at about just north of $82, which is where this peaked out. We could pull back to the 13. We don't have to. This thing could push even higher, show us 84 to 86. And then up above that, we have the 50 EMA at almost 87 right now. And then north of that is this pivot that we have to the top at about 91. So we could start to see, after this higher low that we put in from what was back here, we could continue to see that push up against the resistance up to the north on Crocs. And hopefully the chart ends up being a lot prettier for these underdogs than the shoes themselves. So if you guys like Crocs and you need to argue with me about that, put that down in the comments. Have a little bit of fun with it. That's all I'm doing, is having a little bit of fun myself when it comes to picking on the shoes. This is all about the finance that's here. So push to the north. Yeah, we got a little bit of a shelf that's right in here about 85. If we can sit on top at 86, we should be able to push up above that EMA that's there. And then we have that rise up to the previous pivot, like I said, around 91, the 93 north of that. That gap that we have to fill goes all the way up to about 96. And I don't know that we're going to turn this ship around on this one, but I think at least in the very near term, we might have some very solid trading opportunities coming our way for number 2 out of the top 5 underdog stocks that I have here. And then the last one is our friend at Nike. Now, this is different because I'm sharing the monthly chart on this one, because I think it has the most important monthly technical that we've seen in a while because we've been riding along that 200 month. It's very flat. It makes for a nice, very flat, stable surface. So think about when we hit the slanted parts of it, like we see right here. Those slanted parts are kind of like working on a roof, if you will, that you have some stability in there and everything, and you can find that support if you're standing on it, and you can hit your hand on it. But those flat surfaces that are very hard to push through because it's very consistent in terms of its resistance or support that it offers. Maybe my roof analogy is not great, but still, we have a very flat 200 for this one, and we have a negatively sloped 50 EMA on this one, and this is from the monthly chart that we're looking at. But the fact that we still are above that 200 is a very good thing. Now, if it can hold as support, that's really where that power comes into this thing. What do we got to watch for? Well, we got to make it back up on top of the 5 and the 13, and we absolutely want to stay north of the 200. Down below the 200, especially if we hit our heads on it and we get rejected, that can be a bad thing for us. So we want to see this price move back up north of 79.50. That's where we got that rejection the last time. Trying to make that climb, indecision, and I think I'll sell off. Oh, wait a minute, I'm back up above it. And right now I'm holding as support. So holding that 200-day support supports my case here that as long as we can do that, we should be in very good shape for a further rise. Now, something else I want you to see, let me take down some of these other technicals because I really want you to focus not on the Fibonacci extensions that are on here, although they are important in terms of seeing that support and resistance. There we go. One of these times I'll click the right button combination. There we go. I want you to see this descending wedge pattern that we find ourselves in. And let me adjust it to look a little prettier on the monthly chart. There we go. So we've broken out of the top of this thing, retested it. So not only we're in the 200 EMA, but we're also in the top of a descending wedge. This could be that time for that bullish breakout moment that could take us to the north and start to show us prices back in the 80s or 90s from where we're at right now. The 50-month EMA on this one, by the way, is at 88. If we drop down to some of the other time frames on here, such as dropping down to the weekly chart, where do we find ourselves at in terms of moving average? This is not a great look right now in terms of being bullish for this. The RSI for the monthly is down below 50. RSI for the week is just down below 50 at 47.75, and it's declining. We need to get back up on top of those moving averages, which means that we need to sit back up on top of 72.64 on a weekly basis, which is right along the bottom of this where we had that support before. Now we're down below it. That's resistance for us. So that's the first effort that we need to make, is making it back on top of 72. We'll call it 73, holding on to that as support and definitely getting on top of these moving averages. Now, where's the 200 week for this one? It is also to the north, all the way up here at 88. So not a great move. We're kind of just marking time slowly, steadily downward. We need to see that push back up to the north, and it would be nice to see some volume also go along with it. If we drop down to the daily chart, this is where we start to see a lot of things that we don't want to see in terms of being bullish. Now, mind you, the monthly chart really makes the case that this could be that longer term sign that we're going to move through it. Near term, though, what do we see? Well, what do we have going for us is we see this buying pressure that's coming here, probably because the bounce off the 200 month is what my guess is for why we're seeing that long bottom wick on this thing. That also means our price in the near term needs to open back up above this one, that we need to see a green candle. Here goes my drawing skills again. You guys are all welcome, and I'll turn this thing green for us. There we go. It doesn't necessarily have to be green, but it is nice. It's a nice large body green candle up here. If this is what we get on Monday of next week, this could be absolutely incredible to see this. This would be a bullish sign for us. Now, mind you, we also have some moving averages to compete with. We have the 5, the 13, the 200, and the 50. This is showing us further bearishness on the daily chart. We got bearishness on the weekly. We are barely staying bullish on a monthly basis for Nike. This thing has been slaughtered. It is my favorite. It is my top 5 of the underdog picks, because if it can hold that 200-day support and if it can soon turn this ship around, then what that would do is it would avoid the death cross, which would be this 50 EMA crossing down below the 200 EMA on this one. We already saw the 5 cross it. We already saw the 13 cross it. The 50 crossing it is really going to push this price down. So let's go back out to that monthly chart. And I know that this is a lot of ifs, but hey, these are underdogs. This is what you get when you're trying to look at these stocks that are towards the bottom of things. They're going to have different characteristics than what you would find if they were farther north. So we have some really important pivots, by the way, that happen to come in right around 51, and then also up to about 55.85. That's what I have on here. So you can see the buying pressure that came in going back to the pandemic. You can also see the buying pressure that came in back in April, where this thing bottomed at about $50 and then made a rise back up to almost $80. So to see that 60% climb was incredible. This could be that first give back, de-risking a little bit, and that could be that next thing that allows things to cool off and reset and push us back upward. So monthly basis, we have rising RSI, but it is still bearish. So we got to be watchful for that. So yeah, we're up above some of these previous peaks that we got, but that cross above 50 will signal much longer term bullish momentum, and we just don't have it yet, and it might take the entire quarter to make it happen. We're going to have to see what sort of performance we get. On a weekly basis, we better make this just a peekaboo from last week, and we want to see that push back upward, back north of this going into next week. And as long as the wheels stay on the wagon for the market and the market stays bullish for a background bias on this, this could also help us out. Now, we are just barely at oversold territory as we also find ourselves down here as well, which could also signal us that we could see that turnaround. So for these top 5 underdog stocks that could perform very well, to start off Q4, we'll say, in the very near future, as long as the market bias stays bullish for us, the more bullish the better, but as long as the market stays bullish, even if it chops sideways, which would be mitigating but not as bad as selling off. If it sells off, these are likely also going to sell off because the reasons the market could sell off. We got to pay attention to that as well, of course. But these, I think, do have the opportunity to give us some wild success early on as we close Q3 and get into the beginning of Q4. Now, I know that there's also some geopolitical tensions that are out there. We have to give a hairy eyeball at those things as well, because even though they might not initially impact the market directly, if things do destabilize further, especially in a snap, shocking type moment, that could be downward pressure for the market, at least initially, before we would start that march back up again. And again, it's a big nuanced thing, and that's why I come out and make these videos nearly every day, trying to make it every day, trying to make it at least 2 times a day, hopefully 3 times a day is what I'd like to get into. Mind you, you guys can find me over at the Discord as well, me and the other panel experts that are over there, and the entire ecosystem that's there developed to help you in your journey towards financial freedom, building alpha in your portfolio. You can come on over and check it out. Use code word doctor when you sign up so you can test it out for less than $1 a day when you sign up for that earner tier, so you get unrestricted access to everything that Discord has to offer. And I'll tell you what, it's very incredible to see that you can make money on the way up, but you can also make money as your favorite stocks, ETFs, market, whatever it is, happen to come back down, that you can really learn how to trade in any environment and even talk about investment. I know in my own personal life, I don't have a lot of people to talk about money with. There's just not many in my household. Nobody really cares to talk about money. Some of my friends like Stockmo and Crypto Will, we love to talk about money, but we also live in different parts of the country. And besides some phone calls or chatting on Discord or something like that, we don't necessarily get a chance to talk about money every day, each day. But over at the Discord, that opens it up to allow you that anytime that you want to, there's an entire community that's just as passionate about learning how to trade, learning how to invest as you are, and that can be a very invaluable thing. Now, mind you, if you want to produce these technicals yourself, if you want to learn how to trade using those technicals, if you want to learn about options, I run options workshops, but I will say that there's coursework through Stockmo Academy down in the description of this video, that if you click on that, use code word doctor when you sign up for those courses, same code word as signing up for the Discord, by the way, it will get you access with a $400 discount for those courses. And if you bundle the 2 courses together, trading and also the options, you get a bundle discount on top of it. Guys, let me know what you think of those underdog stocks. Do you like them? What do you think about them? And are there other underdog stocks that we should be addressing here as well? Let me know. I'd love to hear from you. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.